So yes, we're going to talk about Bitcoin and blockchain technology. Now, in 2000, I think, by the way, to put this in some kind of context, the elder of you in the room might remember the Industrial Revolution a couple of hundred years ago, and I think we're kind of on the cusp of a new revolution, which I've called the financial revolution. And in 2008, while the world was busy panicking about the global financial crisis, a computer programmer who went by the name of Satoshi Nakamoto posted a message on an out-of-the-way mailing list, and he said, I've been working on a new electronic cash system. It might make sense to get some just in case it catches on. And nobody paid any notice. It was 3 days before he even got a reply. But what he had programmed, of course, was the world's first, the world's most famous alternative currency, Bitcoin. And I don't know what the collective noun is for a group of devotees, but I've called it a cult of devotees. And he inspired a cult of devotees: economists, activists, anarchists, speculators, computer coders, libertarians, criminals, entrepreneurs. All sorts of different people were inspired by his invention. And I've actually done a calculation. Now, this is almost a year later since his first mention of this new invention. And it was October 2009. And there was a Bitcoin aficionado who went by the name of Liberty Standard, and he published the first Bitcoin exchange rate. And he arrived at this figure by dividing the amount of coins that his computer generated by the amount of electricity it used. And he worked out that there were 1,309 Bitcoins to $1. And the price actually fell over the next 2 months, so that by December of 2009, there were 1,630 Bitcoins to $1. Fast forward 4 years to November 2013, and one Bitcoin was $1,240. It was the same price as an ounce of gold. And if anyone managed to buy the low and sell the high to the day, and you're all seasoned traders, so you will realise how easy it is to do that. But if you managed to do that, you made 2 million times your money. You turned a pound into 2 million pounds. So they were kind of electronic lottery tickets. Now, we're going to start by, the thing I always arrive at when I mention that I've written this book about Bitcoin, people all go, oh yeah, I'm quite interested in that, and I don't really understand it. And I think the best way to understand Bitcoin is, in various accounts, I've got some dollars, some pounds, some euros. I've also got various supermarket rewards points. I've got some air miles. Now these are all none of these forms, they're all digital tokens that at some stage can be exchanged for a good or a service. So they're all forms of money. But none of them actually exist in the real world. They're all, as I say, digital. And if I want to use any of them, if I want to use the dollars or the pounds, I've got to go through a bank or a credit card company or PayPal or whatever it is. If I want to use the air miles, I've got to go through the airline company or the credit card company. If I want to use a supermarket rewards points, I've got to go through a supermarket, and so on. So they all involve the use of some kind of middleman. Now the idea behind Bitcoin is, let's see, I haven't actually got my wallet on me, but let's yeah, that old trick. Let's just imagine that this pen is a pound coin, and if I'm standing next to you, so I can hand you that pen, and that is what would be called a cash transaction. It's a transaction that involves you and me and nobody else. And what computer coders had for years been trying to do was to replicate that cash process digitally. And this had been going on since the 1980s, and nobody had found a way of doing it without the use of some kind of middleman. To the extent that by kind of the early noughties, programmers had just given up on the idea. And the breakthrough of Bitcoin is that Satoshi Nakamoto, the programmer, found a way of doing it. Now the problem, I should say, with doing it digitally is if I send you an email or a video or a picture, any kind of digital code, you can, if you want, cut, copy and paste that code and send it out to 100 or 1,000 or 1,000,000 different people. Now obviously, if you can do that with money, the money is pretty soon useless. In fact, it's immediately useless. And this is known as the problem of double spending. And this is what had confounded the computer programmers, how to get round this problem of double spending without a middleman. And the breakthrough behind Bitcoin was this ingenious new system of automated record keeping. And it was a vast database on which every Bitcoin transaction that ever takes place is recorded. And that transaction is only complete, it's only what they call secured, once the transaction has been stamped in this database, entered in this database. And this database is called the blockchain. And once a transaction is recorded on this database, it is final, it is secure, and it can't then be replicated. And so this blockchain is the technological breakthrough behind Bitcoin. And that has enabled people to send one Bitcoin to another person without that person receiving the coin being able to double spend it. And that is, so the first thing I should say is think of Bitcoin as a form of digital cash. As opposed to digital money, think of it as digital cash. I hope I've explained the difference between money and cash with that analogy there. And it is the genius behind it is this blockchain that has made it possible. And it now means that people can send tiny, tiny, tiny amounts of money or vast sums to anybody, anywhere, at zero cost, just as they would use cash. Obviously, most of us today, for various reasons, only really use cash for small transactions. And it's probable that Bitcoin and all the things that follow on, is going to usher in an era of micropayments. Now, I have to say, Bitcoin's very exciting, but I'm not particularly bullish about the price, for reasons I'm about to explain. Now, I just very quickly want to explain one more thing. So, Bitcoin with a small b, or no, let's start with Bitcoin with a capital B, is a protocol. Now, what is a protocol? A protocol is an agreed means by which information can be exchanged. So, for example, the World Wide Web, every time you type in an email address into your browser, you might see the letters HTTP appear. And HTTP stands for Hypertext Transfer Protocol. And HTTP is the agreed means by which the internet is shared across the World Wide Web, is the agreed means for the transfer of information across the World Wide Web. When you have an email, you might have noticed the letters SMTP, which stands for Simple Text Transfer Protocol. So SMTP is the agreed means by which emails are shared. And so Bitcoin is another protocol, and it's a protocol by which money initially, and as we're going to see other things, is shared. And the unit of money on the Bitcoin protocol is Bitcoin with a small b. Now, that's a little quote from a funk song that I used to listen to in the 1980s that I enjoyed. MasterCard, Visa, American Express, I ain't got nothing against no credit cards, but cash is the best. So now, this we're going to talk about now. Now, this is why I'm not particularly excited about the Bitcoin price. This is just one man's opinion. You're all brokers, you're all experienced, you realise the value of one pundit's opinion is pretty much zero. But nevertheless, this is a thing called the hype cycle, and it was devised by a company called Gartner. And it's a cycle that describes the process that a new technology goes through on its way from invention through to mainstream adoption. And the first phase is the technology trigger. Now, if you cast your mind back to the year 2000, computers were slow, hard drive space was limited, smartphones didn't exist, nor did iPads. My parents didn't even have a cell phone yet, or mobile phone yet. Twitter, Facebook, apps, Gmail, cloud computing, none of that stuff existed. I discovered that Google was only incorporated in 1998. And there was just 350 million people in a global population of 6 billion at the time were using the internet. And the internet that they were using, it was really slow, dial-up modems, fiber optic broadband, 3G, 4G, none of that existed. Tech, computing, the internet, the developments that have been made over the last 15 years have been incredible. And yet, as we all know, the NASDAQ is still trading below where it was in the year 2000. And the NASDAQ went through this hype cycle. And the first stage, and this will be where there is of the hype cycle, is the technology trigger. And a new piece of tech is invented, it's conceived, it gets people interested, there's some R&D, a little bit of seed money, there's some startup capital, there's some first generation products that pique early adopters' interest, and eventually it gets some kind of mass media hype. And so the technology trigger would be kind of .com in the mid-90s, late 90s. You're all, I'm sure some of you were there and made a great deal of money out of it. And then we go to the next phase, which is the peak of inflated expectations. We've got this amazing new tech, it's going to change the world, mass media hype, speculative money starts pouring in, share prices rocket. That was .com in 2000. And so we move into phase 3, the trough of disillusionment. Prices fall, there's a little bit of negative press, there's some business failures, less than 5% of the potential audience has fully adopted this new tech. The reality of how far there is to go towards mainstream adoption settles in. This is the trough of disillusionment. And by the way, for those of you that I can see a couple of you out there who I know who are interested in mining, a mining company goes through exactly the same cycle. This is the first two phases is when the geologists with the beards go out and they find someone, everyone gets all excited, and then the next phase, the trough of disillusionment, is when they realise how much this mine is going to cost and how long it's going to take to build before it earns any money. And so we were in terms of the NASDAQ, we were in the trough of disillusionment, 2002, 2003. And then we start going up the slope of enlightenment. Second and third generation products come out. Some of them are good, practices improve, all the scoundrels have been wiped out, more and more users come on board, new products are developed and so on, until we head into phase 5, which is where the NASDAQ is now, with companies like Apple posting all these record earnings, the plateau of productivity. Google, Amazon, they're making serious money. I think Apple is now the largest company in the world. The internet has now 3 billion users, and that's growing at 250 million a year. So within a year, half the world's population will be online, and more than half the world's population already have some access to the internet. So it's finally doing all the things that people said it was going to do back in 2000. Now, so there, by the way, is the NASDAQ between 1998 and 2007, and there's that chart there. And this is the same chart, but with much smaller lettering, describing the various things that we go through. It's probably too small for you to read on this screen, but I think I've demonstrated the point. Now, Bitcoin, in my opinion, and this is just one writer's opinion, is somewhere in this trough of disillusionment. It's where the NASDAQ was in, 2002, something like that. Here, by the way, that's a chart of Bitcoin. For those of you that get manipulated by charts, the time scale is much more like that. That's just 2 years between January 13 and January 15. But like I said, the early adopters were making hundreds of thousands of times their money, and by November 2013, when Bitcoin was the same price as an ounce of gold, Bitcoin is going to change the world. We're going to overthrow governments. We're going to solve third world property. All these crazy claims that were being made, and there were still less than 5 million wallets online, and that means there's probably probably about 2 or 3 million users, something like that. So the claims that were being made are crazy, and so I think Bitcoin is going through precisely this cycle. Blockchain tech, on the other hand, the technology behind Bitcoin, has not had its peak of inflated expectations. I think it's somewhere down here still, in this first technology trigger phase. Now I'm going to describe to you now what, I'm going to talk to you a little bit about blockchain tech and explain what it is and what it can do. By the way, Bitcoin, it fell 67% last year, and at one stage this year it was down another 50% on that. It cannot get a bid. So it is somewhere in the trough of disillusionment, in my opinion. But as I say, the blockchain tech, I don't think it's even got started yet. Now, although Bitcoin is still a long, long way from mainstream adoption, coders can see that the breakthrough tech behind it, this blockchain, works. And I'll give you one demonstration of how this works. It has already become the money of, in the same way that cash is the money of choice on the black market, Bitcoin is the money of choice on the online black markets, in what are called the dark markets. And it is already fine. I'm not advocating going out and using dark markets, but black markets don't have deep pockets of venture capital to fall back on. They have to make something work quickly, otherwise they're not going to use it at all. And they're often the first to turn new tech to profit. Black markets were the first companies that started making money out of the internet. And they're already using Bitcoin, and that is testament to the fact that the tech works. And so coders are finding a whole new host of applications for the blockchain. So there are new systems by which people can communicate with each other being developed without the use of third parties. So if you want to send an email, you don't necessarily go through Gmail or iMessage or Facebook or WhatsApp or Twitter or LinkedIn or whoever it is. None of those companies will have access to what's being said. Communication will go back, it's a bit like an old-fashioned letter in an envelope. Only the person that the letter was intended for will read the contents of it. And that has all sorts of implications for privacy. And it has all sorts of implications for the model, you know, the kind of Facebook model where you can use Facebook for nothing in exchange for handing over all this personal information about yourself. And that's a kind of growing theme that we're going to see in the years ahead. Some people say, well, I haven't got anything to hide. I don't care if Gmail wants to have access to what I'm saying. But the issue is bigger than that. This idea of the blockchain basically is a structure of permanent memory that keeps growing organically. And this idea of a structure of permanent memory that's growing all the time opens up enormous possibilities for improvements in accounting, in auditing, finance, insurance. It will increase transparency. It will reduce the possibilities of fraud. Fraudsters are going to have to they're going to have to innovate. There are new systems of contracts by which contracts can be automated, which will obviate the way that lawyers currently work. They'll have to, in many cases, they'll have to change the way they do things. It's going to bring all sorts of improvements to the legal profession. Ownership of financial assets can be recorded and exchanged over a blockchain. That will change the way potentially that stock markets now operate, that share registrars work. The same goes for land. You could put the land registry on a blockchain. Did you know that 50% of land in the UK is still unregistered? Incredible statistic. Even things like motor vehicle ownership. I think what you will see is companies bidding for contracts for things like the DVLA and, well, I'll come back to this in a moment. The tradition of usernames and passwords, that is on its way out. You're going to get new online identity and reputation systems. And if you think of your online reputation, your your Uber rating or your eBay rating or your TripAdvisor reviews, those kind of things. These can all be recorded on a blockchain, and one of the nice things that might happen is it will bring a wholesale improvement of behavioural standards. There are even now blockchain-based mobile phone operating systems being developed. So we have Android, we have Mac OS, and now there's this new thing called Trustonic. This idea of disintermediation. By the way, I should have said at the beginning, when I was explaining the Bitcoin protocol, and I got some kind of baffled looks, nobody knows quite how the internet, well, a few people know how the internet, but the majority of people don't know how the internet works. They don't know how emails work. They still happily use it. It doesn't matter. If the same will happen with Bitcoin. Everyone has this, they have to understand it. But we will reach a point where people will just use it without knowing how it works. You don't need to know. I don't know how my car works, but I still use it. And these words like decentralization and blockchain and disintermediation and cryptocurrency, they'll become, if you go back and look at old videos of the 1990s and chat shows and people talking about this new thing called the email, and they're going, what's the @ sign? I don't understand this @ sign, and what does www mean? All these kind of, it'll just become every day in the same way that it has with the internet. But this idea of disintermediation, record keeping, decentralization, it's going to have a huge effect on healthcare, welfare, education, and the bureaucratic megalith of middlemen currently involved in those huge institutions. And you're going to see all sorts of tech companies winning government contracts to improve these sectors. And, that's going to get people who read the Daily Mail outraged on one hand, it's going to get the people who read the Guardian outraged on the other hand, because there's this kind of clash between the private and the public. But in my opinion, it will bring improved efficiency to those sectors in most cases. So the blockchain, ladies and gents, is going to change the way that we do things, and the implications behind it are enormous. And as I say in my book, the revolution will not be televised. It will be secured on the blockchain. Now, this is a nice little story, and it's worth thinking about. And it's about landlines and mobile phones. At the peak, by way of a show of hands, who still has a landline at home? Okay, most of you. Who doesn't have a landline at home? So quite a few of you. And notice there's the generational thing. Everyone who's lived in their house for a long time has got a landline because they've had it for a long time. People who've moved into a house more recently just don't bother unless they need it for an internet connection. Of the people who put their hands up who actually have a landline, who actually uses their landline? Okay, so less, a smaller percentage. At the peak of the landline, and that came, by the way, in 2008, there were 1.3 billion landlines worldwide, and that number is now in decline. And with a global population in 2008 of close to 7 billion, you might have expected that number to be higher. People like to communicate. Telecoms companies like to profit from people communicating. And they'll lay cables in the Arctic or the Sahara or anywhere if they think there's some money to be made out of it. And if they haven't, it's because they felt there wasn't any money to be made. There's a recent UN survey came out that now some 6.3 billion people worldwide now have a mobile phone. More people have a mobile phone than have a toilet, or a lavatory, as my mother tells me to call it. And this is proven quite categorically, as if it needed proving, that the desire to communicate is there. So why did the landline fail where the mobile has succeeded? Now the obvious answer is the superior technology of mobile telephony has made widespread coverage cheaper. But there's something else, and there's an elephant in the room. Most poor people, most people in the developing world are unbanked. They didn't, and they still don't, have the basic access to the financial services you need to get a landline. You need credit, basically, or a bank account. They might have wanted one, but they couldn't get one. And so the telecoms companies rightly concluded that the demand wasn't there and the infrastructure was never built. So the financial system, not the telecoms system, the financial system was actually a barrier to progress. Of course, with a mobile phone, you don't need a bank account. You can buy the phone and buy the credit you need to use it with cash, the airtime with cash. Almost anyone can get a mobile, banked or unbanked, and they have. Now, the World Bank estimates that 50% of the global adult population doesn't have access to basic financial services. Only 2 billion people are banked and take part in e-commerce, yet somewhere between 3.5 and 5.5 billion have at least some access to the internet, and that number's growing at 250 million a year. So, if we use the biggest number because it's the most exciting, there are some 3.5 billion people, half the world's population, who are excluded from e-commerce because they don't have access to the necessary financial infrastructure, despite the fact that they probably want to trade, exchange, earn money, and improve their lot. But thanks to Bitcoin and other forms of mobile money, the M-Pesa is the kind of market leader in Africa and Kenya. This barrier is now being broken. You don't need traditional financial services or a bank account anymore. Of course, a bank account is useful, but it's no longer essential. And as each day passes, it becomes even less so. To participate in e-commerce, all you need is internet access. And most of the world's population will have that long before they have proper sanitation, healthcare, or education. So I'm suggesting that traditional banking is as redundant as the landline is. People still use it, but it's in decline. Suddenly the developed world is going to have some 3.5 billion people, more people to exchange products with, to exchange services with, to outsource jobs to, and so on. And that is a quite mind-boggling amount of potential new trade. And I think there's a huge boom coming, ladies and gents, not just in blockchain tech, but in global trade as a result of the possibilities that are being opened up. But it is going to take generation? I don't know. The money that the unbanked 3.5 billion people might make will hopefully enable them to buy the sanitation, the education, the healthcare that they haven't had for far too long. And rather, as the Industrial Revolution enabled people to escape rural poverty and within a generation become part of a new educated middle class, so might the coming financial revolution, as I've dubbed it. So that, ladies and gentlemen, completes everything that I have to say. We're now going to take some questions. Thank you very much.